Assalamualaikum and good day. We are Group 2 consisting of ISYAH, CHANDRA, Affan, ZHAFRI and myself. So today we are going to present on the article that we chose, which is the relationship between financial development and the effectiveness of monetary policy. New evidence from Asian 3 countries from Abdul Karim et al. 2021. So next. So today we'll be discussing on the summary of the article, review and comments, relating the article to the course and also the conclusion. Next. So first, the summary synopsis of the article. Next. So as an introduction, we'll be critically analyzing a scholarly article relating to monetary policy. The article will be focusing on the impact of the monetary policy of the countries, which is Malaysia, Singapore and the Philippines. We chose this article as it is relevant to the course syllabus as mentioned. Furthermore, the Asian 3 countries provide unique context to the dynamics of financial development as it is an emerging market. The article also incorporates empirical data and robust methodology, ensuring a more comprehensive analysis, thus making it valuable for academic study and practical for policy implications. Next. So the summary of the article section will consist of the research question, objectives, methodology, and also results. So first, the research question. The article studies on the relationship between financial development and the effectiveness of monetary policy in the Asian 3 countries. It also aims to provide new evidence on the relationship using structural VAR model to generate the monetary policy evaluation and also ARDL model to investigate the role of financial development. It specifically looks at liquid liabilities and stock market capitalization. And the research questions include: how does financial development impact the effectiveness of monetary policy in Malaysia, Singapore and the Philippines? And also, what are the implications of these relationships for monetary policy strategies in each of these countries? I will pass on to my colleague.
Okay, so next I will explain the objective for this topic. So first, we are exploring the relationship between the financial development, the FD, and the monetary policy effectiveness in all the Asian 3 countries, Singapore, Malaysia, and the Philippines, focusing on how the financial development will influence the monetary policy effectiveness on output and inflation. Our second objective is to analyze the impact of the financial sector development on the monetary policy effectiveness using the structural vector autoregressive SWA and autoregressive distributed lag ALDL methods. Our third objective is to reassess the varying roles of financial development in monetary policy effectiveness across the 3 countries, therefore highlighting the unique economic context and the financial system of the Malaysia, Singapore, and also the Philippines. Our final objective is to offer insight that can assist monetary authorities in the Asian 3 countries in formulating the prudent monetary policy and also financial development strategy based on the findings of our studies. Next. So what are the methodology that we use? First, our model selection, we utilize an open economic structural vector autoregressive SWA model to generate measures of the monetary policy effectiveness. And this model will allow for the analysis of the dynamic relationship between the monetary policy output and also inflation. Next, how we collect our data, we focus on the 3 Asian 3 countries like the Malaysia, Singapore and Philippines. We collect the relevant data on the financial development indicators such as the liquid liabilities, stock market capitalization, as well as the macro variables like the output and also inflation rate. The third methodology that we use is the autoregressive distributed lag method. So after we generate the monetary policy using the SWA model, The study employs an distributed lag model to analyze the effect of the financial development on the monetary policy across the selected countries. And this approach will help in understanding both short runs and long runs, the relationship between the variables. Next. So we continue our methodology segment. So next is the impulse response function. So the monetary policy is constructed in each country by aggregating the responses of the output growth and inflation rates to change in monetary policy, such as the interest rate and also money supply, using the impulse response function. So this technique will provide us insight on how the monetary policy shock affect the economy overall from time to time. Then next we have the diagnostic test. So the article will conduct various diagnostic tests, include the normality, series, correlation, and heteroscedasticity test to ensure the robustness and also the reliability of the estimated model. And last but not least, we have the sum stability test. So the stability of the long run coefficient and short run dynamic is examined using the sum test, which assess the structural stability of the model over time. Next, I will pass to my colleague to continue for the result.
Okay, starting from what Isaac has presented earlier, basically the results of this analysis conducted in the article basically culminated from the SVAR method as well as the ARDL method. So basically SVAR method conducts about the relationship between input and output, and as well the ARDL will bring these results about whether which relationship will bring results in the short term and also in the long run. So we start off with Malaysia. So basically the results of Malaysia produce a negative relationship between when the financial development is conducted. Basically the impact about monetary supply on this output, which is GDP, is negative, whereby in this case it means that even though money has been supplied, so people maybe chose to save more rather than spend, which will result in the GDP on the negative side. The growth is not growing. And then in terms of the interest rate, we did not have significant output that is desired. And also on the other hand, the result of this monetary policy effectiveness relationship with the financial development analysis is it has impact in terms of the inflation rate for Malaysia. So basically going towards Singapore, it has a positive relationship between financial development and the MPE. So in this case for Singapore, basically the more money supplied, it has boosted the economy better, the GDP have the growth better. But on the other hand, it has a mixed results in terms of whether the interest rates has impact on the GDP growth in Singapore. It means that people would like to spend more and also build more business or grow more business in Singapore if the money are more supplied compared to whether they have adjusted or tweaked on the interest rates. On Philippines case, basically the effect of the financial development on MPE is contingent upon the specific monetary policy variable. For instance, liquid liabilities has a positive and significant effect on MPE when interest rates are employed as the policy variable. This means that basically the Philippines country would like to have more growth based on more borrowings as well, but in terms of monetary supply, they would keep as what Malaysians do in the previous explanation, whereby they tend to save more rather than spend. So in this case, it is unique case for Philippines. So in terms of interest tweak, the Philippines are more preferred in terms of that, and the growth of GDP are better in this result of this article. So basically, in terms of financial development, plays a distinct role in respective countries. Is not the same as by each country. Although you can see about a similar pattern between Malaysia and Philippines, but in terms of responses that has been produced in the result, is not similar in terms of the character of actions taken between Malaysia and Philippines. So for example, again, the Malaysia are more towards the monetary supply, and also the interest rate changes has resulted in negative in terms of the GDP, but strengthened the inflation, which reduced. But on the other hand, for the Philippines, it produced a different result in terms of the overall GDP growth based on the interest rate tweaks. So here is the summary of overall picture of produced by this journal article analysis conducted in 2021. Basically, something different between these three countries are the monetary policy variable, which is the input. We have two in this article, basically money supply as well as the interest rate. And the output, we have GDP, and also we have inflation. So basically, these are summarized here. Basically, in terms of comparisons between these three countries, basically Malaysia and Philippines has more or less similar results, a bit different, but in terms of Singapore, we can see they have more on another level in terms of the monetary policy supply input. For example, monetary supply as well as the interest rate. Next, we will start on the review and comments of the article and have some comparisons between another similar article. I will start off with the current article, which is the relationship between financial development and effectiveness of monetary policy, the new evidence from ASEAN 3 countries by Abdul Karim et al. 2021. And the benchmark that we have selected for the group is another article by Tung 2022, how do fiscal monetary policies affect economic growth, the case of Vietnam. So in this section, we will discuss what are the differences between the title and how it describes the study, research objectives, theory and findings, and the originality and contribution of the study. Okay, first is basically the title and how it describes the study. In terms of descriptiveness, both titles of the articles effectively encapsulates the core themes of their studies. For example, in terms of the first article or the main article that we have selected here, it clearly describes in terms of financial development, relationship with the monetary policy effectiveness in Asian 3 countries, which is Malaysia, Singapore, and Philippines. And on the other article, basically it describes the fiscal monetary effectiveness on the overall in Vietnam. So basically it clearly scope in terms of the region, and in the other article it clearly scope on the Vietnam as a country and compare it with Asia Pacific region. And then on the scope for the first article, it suggests a focused analysis on a specific region, which is Malaysia, Singapore, and Philippines, and a particular economic aspect, which is the monetary policy effectiveness, while the second article's title indicate a broader elimination of policy impacts on growth in a transitioning economy for a specific country, which is in this case is Vietnam. So it is stated in the title as well. And the clarity about both articles, basically both titles provide clarity on the study's objectives and the geographical focus, making it easier for readers to understand the context and the significance of the research. Next, I will pass to my team member, Siti Hajar.
Thank you, Affan. Moving on to the research objective, theory and findings of the study. So the study, as mentioned by Affan, the study aimed to understand whether having a more developed financial system helps or hinders a country's ability to control economic factors like inflation and growth using monetary policy. So the study has a clear focus, so which makes it easier to follow the aim of the study and also the author's intention. Next, they also use a well-established method to analyze the data, as mentioned by Isaac. So, which means their findings are both thorough and reliable. So, it is giving us a good understanding of the issue in the article. Next slide. Okay, now moving on to the originality and the contribution of the study. So one of the key strengths of this study or research is that it focuses on the ASEAN 3 countries, which are often overlooked in similar studies, as mentioned in the literature review. So by examining these 3 countries, so the study actually fills a gap in the literature review, and it also provides insights that are particularly relevant for policymakers and practitioners in these economies. Also, the study doesn't just offer theoretical insights, so the recommendations are practical and actionable. So it means that the policymakers and financial managers can directly apply these findings to improve decision making in their respective countries. Next is the understanding the course through the subject through the article. So moving on how this article contributes to our understanding of the subject. First, the article is very useful in helping us to understand the key concepts related to financial development and monetary policy effectiveness. So it also provides a clear framework that shows how these 2 concepts are relatively connected. And by understanding this relationship, we can see that how financial system influence the economic outcome like growth, which is fundamental to the study of the monetary policy. Next, the article also encourage us to engage, to think more critically. So by examining how financial development impacts the monetary policy in the context of the 3 countries, Malaysia, Singapore and Philippines, we are able to rethink and challenge some of these existing theories. So the study also helps us realize that if the effectiveness of monetary policy is not uniform across different economies and countries, and that the context of a country plays a significant role in FD and MPE. Thank you. Let's move on.
Yeah, thank you all. Chandra here. I will discuss how this article help understand overall and the insights and the use of empirical data and advanced econometric models such as SVAR and ARTL. So this allows the students to see how theoretical concepts are applied in real-world scenarios. This practical application helps bridge the gap between theory and practice. The case studies also focus on specific countries, namely Malaysia, Singapore, and the Philippines. The case studies allow students to analyze, and this can actually contextualize learning and help students understand how different economic environments affect monetary policy outcomes. Carried on how the article is helping students. This is regarding the policy implications. So the real-world applications, the article discusses the implications of its findings for policymakers, which can help students understand how monetary policy this knowledge is crucial for those pursuing careers in economics, finance, or public policy. Another thing is strategic decision-making. By highlighting the need for tailored monetary policy strategies based on financial development, the article teaches students the importance of context in policy formulation, preparing them for future roles in economic analysis and policy advisory. I'll go through the conclusion of the analysis. So in conclusion, The article serves as a valuable resource for studying monetary policy by providing a comprehensive understanding of the relationship between financial development and monetary policy effectiveness. It equips with theoretical knowledge, empirical evidence, and practical insights that are essential for academic and professional development in economics and finance.
Thank you, Doctor. We conclude our presentation today. Bye.